Hello everyone and welcome to another Popular Investor interview. Today we have Alex. Alex is one of our popular investor who trades ETFs and stocks. He has been trading for about approximately 2 years and he's been on the trading platform for a year and he's up about 60% over the last 14 months. So Alex, introduce yourself and tell our listeners how you've been doing and how you've been making so much money in the stock market and the ETFs while everything has been dropping.
Yeah, thank you for this introduction. Thank you everyone for joining the webinar. So this year has been great for me. Wonderful experience in the Popular Investor Program. Just a little bit of background and context. I studied finance and economics, and I developed a strategy around the momentum that rotate between ETF. It reached 40% this year. I'm very happy about this performance. It's been a very interesting year. We will go back on this later.
So, Alex, how did you get into investing and how did you find eToro?
Yeah, so first of all, my background is in finance and economics. But then I started to invest because I wanted to have the opportunity to maybe retire early and be able to save for projects. But as you know, it's complicated to save money by letting the money sleep in a bank account. Even you have inflation, so you can actually lose money by letting cash sleeping in a bank account. I also find products from traditional bank and insurance very expensive. So I started to look into what strategy I could apply to invest. And then I found I was looking also for different platforms to invest, and I found eToro. That was the cheapest one. And also I found it was a very user-friendly platform where you can manage your portfolio in a professional manner. And I love the social aspect of a platform. You can have daily news. You can see what are the strategy from different traders. This I think is really great. And also to come back to the reason why I decided to invest. For example, if you invest and are able to generate 8% annual return on average, it will take you 9 years to double your initial investments. So this really shows like the power of investing, and this gave me motivation to start investing. And also I feel confident in my ability to do it, and I think investing by myself is more flexible than to go with intermediaries.
That was a nice little plug there that eToro was the cheapest. It made me giggle when you come out with that. Yeah, so as you know, we're commission free on the likes of ETFs and stocks. But how did you become a popular investor? Because someone who is a trader and has a little bit of experience in the market and then coming into as a popular investor, that's a big step.
Yeah, it is a big step. Where I started to look before investing, I started to look for what strategy I could apply, from the most simple one, like passive strategy, buy and hold with index funds, to more complex one. I found the momentum. I will explain more what it is later. We will come back to it. But I developed a strategy that is more complex. And then I found it would add value to a community of eToro, because there was no other trader that was doing this strategy. So I found it was really unique on the platform. And then being a popular investor, it really enhanced my investing. I'm really committed to it. My level, it brings more motivation, and finally, it allows me to really be committed into investing. I follow news on a daily basis. I'm constantly refining my strategy. So I must say that being a popular investor, I think, allow me to be at my best when doing trading.
So what trading strategy And why only ETFs? It's because that's a little bit different. That's, you know, most people trade a little bit of FX, a bit of crypto, but why only ETFs? And with the market the way it has moved over the last year, have you changed your strategy recently to adapt to the volatility?
Yeah, sure. So my strategy is based on momentum. So what is momentum? Is a phenomenon that is observed in the financial markets. But to give a simple example, if you take a soccer team, for example, that wins a series of 3 games, then you can expect this team to win the following games, and then this we say this team has momentum. In the financial markets, is the same. If stocks that outperform in a 3 to 12 months periods, I expect it to continue to outperform in the next 3 to 12 months. So my strategy really play around that. So I select ETF from different baskets following quantitative signals that have the highest momentum. But I know also that the momentum has limitation. At some point it stops. So I incorporated 2 other sections in my portfolio to balance the momentum strategy. The first one is hedging. It aims to reduce the risk of the overall portfolio by being invested in assets that have low or negative correlation to the asset of a momentum strategy. And finally, the last section is opportunity trades. It aims to seize opportunity in undervalued assets, or just to bring diversification to the overall portfolio, to make sure that the portfolio is well balanced between different regions, sectors, and different asset classes, of course.
So I've just shared my screen there, so everyone is looking at your performance and your stats. And one of the things that has massively jumped out there is that if we're looking at your most frequently traded assets, so TLT, VXX, or QQQ, one of the things that me as a trader I look for is if you look at your average profits, and each one of these is always bigger than your average losses. So why is that really important when you're talking about trading?
Yeah, I think some trades can be negative, but when you know your assets, on average you will have positive trades. So it is important to have a long-term view on the. I mean, in my opinion, I always try to have a long-term view on the trades I make, and I know that if I close a position negatively, is to, for example, reduce risk or reduce volatility at some point in time. I don't know if you answered your question. I got lost a little bit. Sorry.
No, but yeah, one of the things that every trader talks about is cut your losses and let your winners run, and that's one of the things that I like here. That I'm looking at CLC, your average loss is 4.5, but your average win is 7.3, and VXX 14 is your average loss, and 20 is your average win. Yeah. And QQ, your average loss is 0, and then your average win is 10. So that is really, really good. Yeah. That's really positive from a trading aspect.
Yeah, to explain a little bit, for QQQ, that is an ETF that tracks the Nasdaq 100 index, is the main one of the main assets of my portfolio. That is part of a momentum strategy. So I'm really used to this ETF, and I let it run with momentum. And obviously, it paid off. I closed with profit all the time. VXX, it was more in this period of volatility in February and March. But I tried to play around it, but I was really cautious and always trade this ETF with small weights, like maximum 3%, because it was very volatile, and is not really representative of my strategy. It was I traded as part of the opportunity trade section to diversify and catch opportunity in volatility. That's why it appears a lot, because I was doing small trading, short-term trading on it, and so there are a few transactions.
Brilliant. So
maybe
So Alex, you're a fundamental trader, and I'm someone who is a technical trader. So one of the things for me is I see the chart and I read the charts, but someone who's a fundamental trader doesn't do that. So where do you get your research for the likes of these?
Yeah. Yeah, maybe you can do a link also with your question why I only trade ETF. Finally, my strategy that is around momentum, it is more efficient and more easier to do it with ETF. If you want to catch the momentum effects with only stocks, you will need a numerous number of stocks in your portfolio to do a lot of transactions every month. So for me, it was really useful to trade to use ETFs to apply this strategy, and also ETF. I invested in different asset classes, and this was really added value to my strategy to minimize risk and apply this rotation of momentum between different asset classes. So obviously, when you trade ETF, you are not trading individual stocks. It's actually, for example, for ETF that are invested in stocks is basket of stocks, is basket of bonds, of corporate bonds, high yield bonds, all these different products. So I like to follow the news that are economic news to really have a sense of how risky is the economic environment. If you can expect higher volatility than usually in the stock market, and to really adjust my strategy with my two sections that I have, as I said, hedging and opportunity trades. So I received notification from Seeking Alpha. I read articles from Wall Street Journal and the Financial Times, and also I consult websites like more specialized about ETF, like ETF Trends and ETF.com. I think when you trade ETF, it's really useful to really get a look of the holdings of each ETF, because you can trade region, for example, Europe or the US with ETF, but finally, if you don't go into detail in what are the holdings, you don't really know what you are trading, because from one ETF to another, there are different sectors, allocations. There are companies that are totally different. If you take Europe, you won't get a full exposure to technology, for example. If you trade ETF that are invested in US companies, you will get more of this. So it's important to really go into research about ETF, and I thought these websites are very useful for that. So I'm used to really check that a lot, and also I do a little I do modelization on Excel and a software that is called R to backtest and refine constantly my strategy.
So you have about 3,000 followers or copiers at the minute. Now, one of the things with copying or following people is that you have to build a little bit of trust. So what would you say to the new copiers who are interested in following you and following, hopefully jumping in and putting their money with yourself? What would you say to them to build a little bit of trust with them?
Yeah. So first of all, I would like to say thank you to my copiers, and I'm really grateful. I must say that having 3,000 copiers and around 3 million assets under management never really affected the way I trade. I think I have a very clear strategy that I apply with care, and I set boundaries between the different sections of my portfolio. For example, the momentum is a minimum of 60%. Hedging is between 5 to 25. Opportunity trades cannot go above 30%. So it forced me to really apply my strategy as I defined it in the first place, and avoid any emotional decision. And also, I'm committed to provide copiers with a high level of transparency and to communicate often. I do share reports on a weekly basis, and I'm always available to answer questions as fast as I can to my copiers.
Yeah, the thing and the Excel that you use R, the program that you use R, seems to have there seems to take a little bit of people have jumped on that going, oh, R, wow, that's interesting. But
Yeah, the
anyone,
data science software and is really useful to do financial applications. My strategy is not quantitatively is not really complicated. But I like to backtest my portfolio and to see how it behaved in the past, even though the past don't predict the future. That's why I invest also in many different assets, because if you take treasury bonds, they were a very good hedge in the past, but if it doesn't work anymore, you need to have other options, and I always consider many asset classes to hedge my portfolio.
so I'm someone who teaches people how to trade on the eToro trading school. Okay. Now, one of the things that I find is that people fail to put in a little bit of work. People fail to journal their trading. They don't do the back testing. So why are you someone? You're someone who's been trading profitably. You're someone who knows how to trade. Why would you bother back testing if new traders don't do it? Why would you, experienced trader, would you do that?
Yeah, I think it's always good to, when you have a strategy or not, at the end, to see to really study what you invest in, to take the time to take a step back on the weekend, on a monthly or quarterly basis, and look at what you invested and how it performed versus benchmarks or versus other strategy. It makes you realize that maybe this investment wasn't the good one, or you could have invested in another assets to hedge your portfolio, to reduce the risk. So what I used to do is, as I said, I rotate between ETF mainly on a monthly basis. I can do adjustments during the months, but I rotate on a monthly basis. And at this moment, I backtest my portfolio to see how it performed. Even though it changed, every month it changed, but I still backtest it. And it gives me insight about what volatility I can expect in the future, what correlation to S&P 500 I can expect. So it's really useful for me to calibrate the assets I put into my portfolio. But I think with backtest, people have to be careful that it's not because this is a backtest that you did 10% annual average with this backtest that you will get it in the future. You have to understand in what assets you are investing. But the market environment and the economic environment is different than in the past. Especially now is very true with the yields that are super low and the interest rates that are low, and is completely different than 10 years ago, for example.
Oh, absolutely. It's definitely different than it was 10 years ago.
Yeah.
Now, what's your goal, and do you have a specific yearly profit that you wish to achieve?
Yeah, so the goal I communicate on my strategy is to deliver equity-like returns with lower volatility and a smaller drawdown. If you compare it to an equity benchmark like the S&P 500 or the MSCI World, so I don't have an absolute target that I want to reach each year. But if you compare with the performance of the equity benchmark I mentioned, if you take the S&P 500 on a long period, like 10 years, you can expect return from 8 to 12% annual return on average. So this is the type of return that you can expect out of my strategy. And obviously, I want to be able to deliver these returns with lower volatility and the risk exposure that is less than a traditional equity benchmark. I think this year the performance is way above the numbers I cited. And if you look at the volatility of a portfolio, I think is way under the equity benchmark, and the drawdowns are around half what the stock market is producing. So this year, obviously, I reached this goal, I think.
Yes. So, any message now, not advice to the people who are interested in actually copying you. What would you say to them now? Obviously, you can't give advice, but any tips, or what would you say to any copiers wanting to follow you?
Yeah, I would like to to remind interested investor that my strategy is long term. When I say long term, is between 3 to 5 years. And also, I think it's important to have a diversified portfolio. I apply this concept to my portfolio. As I say, I invest in assets from different asset classes, from different regions and sectors. And I think something that is really unique on eToro is that investors have the possibility to diversify their portfolio with not only asset classes, regions, sectors, but also with different investment strategies from different traders and popular investors. So I think it's always good to make sure your investments are well diversified to maximize, optimize long-term return.
So first question there from the audience is how do you spend a day on your trading activities? So what would your day consist of if you're sitting down to the charts and starting to trade?
Yeah, so I don't trade on a daily basis. I have a strategy that I applied, and I do ETF rotation mainly on a monthly basis. But I also have a job on the side. But I do follow the news every day. I check my portfolio on a daily basis also as well. And when I trade, is a decision that I thought about it before. I don't take emotional decisions. I will anticipate how I make my portfolio evolve over time.
So do you give yourself a daily or weekly or monthly profit target, or is it just based on the percentage or financial yearly profit?
No, as I said, I don't have a target that I want to reach. My strategy is long term, and I compare it with an equity benchmark such as the S&P 500. So at the end of the year, I judge my strategy by comparing the returns to these benchmarks, and also if I was on a risk-adjusted basis. If my portfolio was less risky and deliver higher return, of course, is very good.
Well, if you're using the S&P as a benchmark, you've done extremely well. What did you say the S&P average over the last 10 years was between 8 and 10%?
Yeah, this was a bright range. Yeah.
Yeah, and what are you up? You're up 30% or 40% this year. So yeah, you've done. I can safely say you've beaten the S&P benchmark.
Yeah, this year it was good, but for example, as I'm diversified, I will be. What brought alpha this year? It was the rotation, because the momentum strategy sent signals to invest in the treasury bonds in March, February. So obviously, these assets are having negative correlations to the equity market. It delivers positive returns, and then in the next months of this year, I stayed well diversified, and I was able to catch returns from the rebound. But then I cannot expect every year to deliver this type of return. Hopefully, it can be, but I have to stay focused in applying the strategy and see how it does versus the equity benchmarks.
We've had a pretty big year in 2020. We've had coronavirus, we've had the markets being overextended, we've had 2 lockdowns. So we now have a potential vaccine coming in. So what do you think will happen in the markets in 2021? Now, I know that is a big question.
Yeah, I think the easy answer is to say that we will have a volatile market, but this is too easy. I think for me, what I'm paying attention is a low rate environment, because of course when you have low interest rates, it makes it more profitable for businesses, and then it tends to push asset prices really high, as it is the case right now. I'm also cautious about the level of debts that we can observe in country, and as I said, it is difficult to hedge a portfolio now with treasury bonds, because the yields are so low and you don't get really a good returns on your investments. So you have to. I think to diversify, you have to look for other assets, and that's why I try to diversify with gold, asset like this, to really adapt to this environment that is full of uncertainty, and I think really new is. I think this year also was marked by it proved that sectors matters. Obviously, technology is doing great, and there was some sort of a hedge for the pandemic.
Yeah, so yeah, the technologies have done really well over that time. Now, you're someone who's in finance. You're someone who has done back testing and stuff like that. So I'm assuming you've read some sort of books on how to trade, and or you have some authors that you actually like or traders that you follow. Is there any recommendation on books that you would give out to our listeners that you think is worth reading?
Yeah. Well, with my studies, I read books that I don't even remember the name, but is more about finance theory. Also, my strategy, I built it by reading academic papers on momentum, because I think it's really useful to read a little bit of theoretical text paper, academic papers, to make the link with the practice. This has helped me, but this day I'm really interested into gold to really understand these asset classes, because I think it can be a way to hedge a portfolio in this low rate environment. So I read a book by Elite Popular about why gold, why now. Is also useful to understand the history of the US, the level of debt, how the debt evolves over time, and what are the implications. I'm really curious in general. I like also to listen to other world-class investors on YouTube, like Ray Dalio, because they have really good insights about the economy. And for my strategy, this is very valuable. I like also to listen to people that have a different opinion than me, or that are really ideas that are really that are different than the consensus, because then I can forge my own opinion.
So you like to listen to people who have different opinions to you. Well, you should come on my course then.
yeah, because I was telling you before this call, I think it's always good. Everyone is good at applying one strategy. Is good. Everyone is good at what he knows what to do. But it's always good to have an open mind mindset. Sorry for the English, and to try to extend skills and to discover other methods, because it can really give you a view of what are the limitations of what you are doing. For example, I think for me to learn a little bit about technical analysis, it can be add value. Anything that I don't know will enhance my portfolio management performance, I think.
So yeah, I would agree. So what's that saying? You have to learn to earn, and that is something that I hear all the time. But just to go back on the books, there's a book that I would recommend for people. It's not a trading book; it's a psychology book, because I find that people find psychology is the hardest thing, is when to cut trades and how to let trades run. So Mark Douglas, Trading in the Zone, is the book that I would recommend to people. Now, I suppose there's probably time for one last question before we go on. It's your trading strategy. Have you changed that at all throughout your time with trading with eToro?
Well, finally, my strategy was well designed in the first place. eToro, it made it really easy to apply it, because I set weights in a precise manner. I have to make sure that each section of my portfolio are in the range I defined. So I didn't really, and also on the offer ETF, I'm always constantly looking for ETF that I could add to my strategy to hedge or to seize opportunities. So of course, there are a lot of ETF available of eToro, so many possibilities for my strategy. but there was no major changes this year.
So Alex, we're just about run out of time. So where can people find you? How can people find you on the platform? Where can people see you?
Yeah, so if you write Alexillouz on the eToro, you will find me. I'm also currently in the choice of editor of eToro, so you will see a picture of me if you go to the Popular Investor web page. And then I share report on a weekly basis, so don't hesitate to comment on this post, to ask me any question you want about my strategy, about assets, about the stock markets, and I will answer you as fast as I can. I also have a website that is not so updated, where I explain a little bit my strategy, and I have a few articles about momentum, ETF, that you may be interested to read. But on my wall of eToro, you can contact me.
And if anyone wants to go to the eToro trading school, if you go to the help section and then go to economic calendar, if we have this drop down menu, see the education, if you go to trading school, that's where the eToro trading school is. And you can join click on register for course. You can join any of the courses, anything that's going on there, any of the Market Watch webinars. So that's all there for you guys as well. But look, Alex, it's been an absolute pleasure. Thank you very much for jumping in on board. Thank you for taking the interview. And thank you guys for signing in and listening to us. Have a nice day. Bye-bye.
Bye. Thank you.